Well, hello there. In this video, I will teach you my simple supply and demand trading strategy. Now, there are a shit ton of videos on supply demand on YouTube, but I guarantee you this is going to be different and this is going to actually work for you. All right. Now, I'm a six-figure funded trader managing 4 problem accounts at the moment, and whatever I teach on this channel is tested and proven to be working. All right. So without wasting any more time, let's get on with the video. And all I ask from you guys is hit that subscribe button because we are very close to 100K subscribers. So here is the strategy. All right. First thing first, we need to be trading with the order flow. All right. We need to be trading with the trend. Secondly, this strategy only uses one time frame. So we are not going to look for confirmation entries. We are not going to do another bunch of complicated stuff. No. We are going to be only using one time frame, all right? And that is going to be 1 hour time frame. Now, the first thing that I told you, you should be trading with the order flow. This is very important. So let's assume that we are in a bullish order flow. Price is going up, right? And an easy way to identify order flow is as soon as you open that pair, within 5 seconds, right? As soon as you look at the chart, you should be able to identify the order flow. If you get confused about the price direction and you cannot identify the order flow within 5 seconds, I highly suggest you move on to another pair. All right, so now what you're looking for is a break of structure, right? So in a bullish order flow, look for a break of structure. Now, I'm not going to explain what exactly is a supply and demand, right? If you want to learn, you can go on YouTube and learn from other people. I'm going to just teach you a strategy based around this method. Now, once you get a break of structure, and all you have to do is then mark out your demand zone in this example, all right? So what exactly is a demand zone, right? It is the first candle, according to me, right? It is the first candle of the fair value gap. So over here, you want to choose the extreme, and I mean extreme fair value gap, right? Once you have a fair value gap or imbalance, whatever you want to call it, mark out the first candle of that fair value gap or imbalance, all right? Once you mark that out, that is going from where you're going to be taking your entry, but it is not that simple, all right? But simply you can take your entry from that and price can literally push through this fair value gap. So there are some confirmations that you have to look for. Now, first of all, you have to look for inducement, all right? What is inducement? It's basically a fake move to the upside, inducing buyers into buying early, right? So before price even comes to the demand zone, right, the price is going to push up and it has to create a low, right? It has to create a significant low. I wouldn't say like extra significant if that makes sense, but it has to create a low near your POI, all right? Now that is going to be a liquidity level. Now, once you have that, all you're looking for is price to come into your POI within kill zone R. So that is going to be from 2 a.m. New York time till 11:30 a.m. New York time, all right? That is London and New York session combined. We are not going to be trading Asian session as long, and it doesn't count if you're trading like, let's say, the JPY pairs or AUD pairs, because you can trade them in Asian session as well. Now, once price comes into your POI, you have to look for a 3-pin bar pattern. And now I've never revealed this before, but this is going to be the first time I'm revealing this. So what exactly is a 3-pin bar trading pattern, right? Once price comes into your POI, you have to look for this pattern. So you have to look for a swing low pattern inside your POI, right? Now, all of it can form inside it, right? But it also can form like this. So where you have like only the second candle touching your POI, right? And the rest is created outside the POI. So now we want to be entering before the swing low forms. And how do we do this? So let's assume I delete this, right? We have 2 candle formation at the moment. The swing low is not formed at the moment. Now you have to mark out the high of the second candle, and you have to wait for price to break. So as soon as this high is broken, the high of the second candle is broken, you enter into the trade. We are not looking for a candle closure. So you're going to set up a buy stop order, right? And as soon as price goes above this high, you will be in the trade. And you're going to be taking your entry, you're going to put your stop right below this low, and you're going to target 1 to 2 or 1 to 3 or the closest target that you can find. That could be external liquidity and it could be internal liquidity, right? So this is the entire strategy, guys. I'm going to show you guys some examples and everything is going to be crystal clear. So Similarly, in case of a bearish order flow, you will look for the same type of setup, right? You will look for inducement after break of structure. You would mark out your supply zone. You would then wait for a liquidity sweep goes into your POI, and you look for a swing high pattern. But we're not going to wait for a swing high to form, but we're going to enter as soon as the low of the second candle is broken. Right, we're going to put our stop right there. We are anticipating now from here onwards, there's going to be a swing low, swing high formation. That's why we are entering quick. And this is going to increase your risk to reward ratios by a lot. So let me give you guys some examples and then I'll end the video. All right, guys. So here is example number one. I'm looking at GBP USD on the 1 hour time frame. And if I zoom out, you can see that within 5 seconds, I can identify the order flow. So this has to be very, very simple. All right. Now, secondly, what I'm looking for is a break of structure. So over here, we have a break of the structure. We had a higher high, higher low, and then a higher high. Now, you have to look for a fair value gap. So over here, we have a fair value gap, or you could say imbalance, right? And you have to mark out the first candle of that fair value gap. Now, you have to look for an inducement pattern, right? So over here, you can see that we have a low pattern right here, right? So that is inducement. It is near our POI, so that is very important. Now, we have to look for a swing low pattern, right? Or a 3-bar pattern, whatever you want to call it, 3-pin bar pattern, whatever you want to call it. Now, you can see that we have this candle. The second candle is the lowest, and as soon as the high of the second candle breaks, right, that gives us a sign that price is going to form a swing low. So we want to set up a buy stop order as soon as the high of the second candle breaks. And we want to put our stop right below this low here, right? And we can target 1 to 3, 1 to 4, or you can target the closest and safest target, which would give you 2.11 RR. Let's move on to another example now. All right, guys, so here is example number 2. I'm looking at GBP JPY on the 1 hour time frame, and over here you can see that the order flow is clearly bullish, right? We are going up. Now, over here we had a break of structure, right? And we want to mark out like the extreme like the demand zone, right? So over here you can see that we have this candle over here with fair value gap. So this is the first candle of the fair value gap, and this move caused the break of structure, right? So we want to look from here to here for our like demand zone, and this should be the extreme one. So over here you can see that we had a buildup of liquidity here, and then also we had this tiny little low created just before our POI, right, in the London session. So as soon as price taps into our POI, we are looking for a 3-pin bar pattern, and we have the first candle, the second candle, and as soon as the high of the second candle breaks, we are entering in the trade, putting our stop right below this low, and we are going to target the closest target, which could be this, giving you 3.3, right? Or you can simply just go for 1 to 2 risk to reward ratio. Very easy, guys. Nothing is complicated about this. If you stick to trading this strategy, you're gonna make shit ton of money. All right, let's move on to another example. All right, guys, so here is the last example. I'm looking at Euro AUD on the 1 hour time frame, and as you can see, the order flow is clearly bullish. We have been going up here, and if you see that we had a break of structure just around here, right? Now we want to mark out like the extreme fair value gap candle and the first candle, right? So over here you can see that we had a tiny bit of fair value gap, and this candle is going to be our demand zone, right? So over here you can see that before price came into our POI, we had a buildup of liquidity, which is inducement as well. And as soon as price tapped into our POI, you can see that we had a beautiful entry to the upside. So over here you can see price came into our POI, right? We had 1, 2, 3 pattern, and as soon as the high of the second candle breaks, you can go long. Now, sometimes if the setup is this clean, right, you can take the entry outside kill zone hours as well. So that could be till 12:30, right? You can still take your entry if the setup is clean like this. Look at this. We had a beautiful inducement, right? We had a clean POI after break of structure, right? And look at this. This was just beautiful, all right? And it would have given you a very nice risk to reward ratio, around 6.42. Thank you so much for watching, guys. If you did enjoy this video, please hit that like button. Please hit the subscribe button. I'll see you guys in a couple of days. Goodbye.